Recap for the 5th day of December. 20 days till Christmas, folks. One we were watching as the gold just went sideways here, but dollar did go down. Now, here's the problem. Because they went sideways and gold went down, that tells you that gold thinks they're going to bounce here, which means they're going to go down. All right, that's the information. That's what you learn when you become a trader. All right, you can oversee here a silver showing you the same. See, gold is showing this on a MACD, silver showing you the same thing, dollar showing the same thing. Well, they can't go the same way. All right, so gold, because it held up here, is most likely going to try to bounce if the dollar goes down. However, if the dollar does bounce here, gold is going to break to the downside. Do we have that information yet? We do not. That's where our problem is today. And every day there's a problem that some are unsurmountable for a retail trader. Right? So at any rate, today we were dollar weakness. Right? So dollar weakness means euro to the upside, and sure enough, there goes euro to the upside. It missed its target by about 6 pips, maybe right there. All right. Wait for 5 o'clock. If dollar still goes down, that's a big question, then we're going up in this area up here. Look for it go up about 86 pips up in there. I think it's 93 pip ATR. All right. Pound dollar, same thing here. It's just shy of target right now, right there. And it was a session recap from yesterday. Nobody traded it, so we couldn't count it. It was a perfect trade this morning, though, because this was trade 1 on a break, lift, and go, and this was trade 2. Holding for the limit up here, and you see they almost got to it right there. See? All right, so dollar goes down, we're going up into this area tonight. All right, now there's not much room up in here. As you can see, there's only about 40 pips. All right, so not a lot of room up there to make that trade. Dollar Swissy, it validates the dollar right down to its target, right to its ATR. I wonder if they knew where it was. I don't know. That's Scott. He's so lucky. Oh, yeah, I remember what Scott said. The space between them is uncontested. I now remember that. The space between them is uncontested. See that? The space between them is uncontested. If we continue down, we're coming down to here. It's just what the market does. Learn what the market does. All right? So down in here, doesn't have a big ATR. It's only like 66 pips or something. All right? Dollar yen. Now, dollar yen this morning really confused us, and so we stayed away from it because it had a breakout up with dollar going down. Did that make any sense? No, it didn't. But if the dollar goes up, they have already positioned themselves for the upside move. All right. There is a square up here. So target the square up. If it goes up, it's 1, 2, 3, 4, 120 pips up. The ATR in dollar yen's about 170 pips, I think, something like that. So it can get all the way up here if it wants to. It is a real estate of the week trade. So if you're in this trade, you're holding, all right? And this is the problem with holding swing trades, is because that's why you got to live through the swing down. All right. Yeah. You took it on the bottom here and you went up, and now you got a hold trade 1. Oh man, it went down 120 pips against me. I should have taken the profit up here. No, you shouldn't have. If you're going to trade a swing trade, you live through that. That's why it's called a swing trade. All right. And now you're looking for that. All right. But with dollar at the bottom of the range, it could very well bounce, which would mean that this would go, this should go up. All right. If dollar keeps going down, this should not go up. All right. So be aware. All right. Aussie dollar barely only got 66 pips, and it's not going anywhere. See that? There's the target, but it's not going anywhere. Dollar goes down, it should go up. Got a nice range in here that we could trade if we get up in that area. But right now, she's not moving. Why is she moving? Because they're waiting for the dollar and non-farm payroll. Euro yen to the pip to its ATR. Boom. It was an alert last night. We only had one trader trade it, and so we couldn't count it, but it went to the pip to the target. There it is. All right, dollar goes. Remember, it went down. It went up when the dollar went down. All right, so tonight, if the dollar keeps going down, anticipate the bounce and continuation to the upside. If the dollar bounces, anticipate this coming to the downside. All right, got a big ATR. So there we go. Pound yen, same thing here. All right, we've come down now. We went up. The target was up here. We did a big move up here. The blog post this morning, there was about 90 pips left of what they got. It was 120 pips of what they could have done. And right now they're down here where they got to talk to us. As you can see, we got to close and reverse right there. All right. So is it going to break up into here and do that? I don't know. I am in the trade, but you know, it's not giving me anything yet, and it's getting late in the session. So once I'm on a currency that's not going to move to the Asian or the London session, my job right now is to get to break even. However, I leave my 2 trades on up here. Right now, if it screams to the downside, it'll never execute those trades. So I don't have to worry about those trades. But if it does go up, I want to be in. So the question is always this. If you break this line right here, if you can break this line, do I want to be in that trade? If the answer is yes, put your entry orders in. All right. Now, if it goes the other way, it'll never execute them. If it goes that way, you want it to be executed because you want to be in. It's not rocket science, right? So high potential here that's an A and a B and a C for a much deeper move to the downside. You can see bears got control, MACD's pushing down. All right, so I'm going to work this to break even, and I'm getting out of this trade. All right, over to Aussie yen. Now, wait a second, one more thing. I have no control over what this does. I only have control over what I do. All right. So I bought it to 382, and I got really close here within 4 pips of getting out of break even. I wasn't here to watch it. Now, after I close the class, I'm going to have to be here to watch it until it gets up there and I can get the break even. And I take it off. Now, why do I do that? Because a break even trade is it's as if it never happened. Always think of a break even trade. It's as if it never happened. All right. Over to Aussie yen. All right. Aussie yen got a pullback here. And you know, Aussie yen goes opposite the dollar. If the dollar goes down, we should continue up after this pullback here. If the dollar goes up, however, that'll be a different story. This will go down. You have a 0 line break already to the downside. MACD is pointing the way to the downside, which tells you they think the dollar is going to bounce. They are taking positions based on the dollar bouncing, not on a continuum. So be aware of that. All right. So this best thing to do is wait till 5 o'clock and get a new ATR, and you'll be able to calculate where it is. Your Aussie, your Aussie right to the ATR, missed it by about 4 pips there. That's all. All right, of the trade session recap from yesterday, nobody traded it. All right, so there it is, up to there. Nothing to do, but if dollar, remember it went up. Dollar went down last night. All right, so if dollar goes up, down, all right, then look for this up here. If the dollar goes up, look for this down here. All right. You already have divergence in play. So the down is very, very real. All right. Very, very real. You've got divergence for the sun. Could very well be a rising wedge. All right. Over to Swiss yen. All right. Almost a target right now. Not quite there yet, but a couple more pips and we'll hit that target. Most likely in the next hour, we'll be done with this trade right there. All right. All right, it went up when the dollar went down. Dollar goes down tonight, look for it to come up here. Dollar goes up, look for it to retrace and come back down in this area here. Pound Aussie. All right, Pound Aussie. It was headed to target, but it slammed into the range top. First slammed into the day chart top, then it slammed into the range top. All right, so if they're going to go and take that target out, they got to pull back down here to go run at it. Because professional buyers won't buy at the top; they'll only buy at the bottom. All right. So and it went up when dollar went down. So if dollar goes down tonight, look for this trade up in here. Vice versa if it reverses. We don't know yet. We're at the point where they got to talk to it. All right. You're in New Zealand. 1 pip away from its target. All right. From yesterday to there, they missed it by 1 pip. That's all, folks. All right. If you're not using the ATR, you're not trading, you're gambling. All right. So there it is. Same thing. Got room up here. Not much. Only 60 pips up here. All right. For a big ATR, that's not much. So they'll most likely pull it down here. If they want to go up to the top here, they're going to most likely pull it down because they got 140 pip ATR and they only got 60 left here. So they'll pull it down here to get the 140 pips. All right. Why? Because the market is manipulated. What did they do over here? They ran out of buyers. They came down and found buyers, and up they went. See? They come up here like this. They ran out of buyers. They came down here, found buyers, and they went up. That's all it's doing. It's not rocket science. Pound New Zealand. All right, almost a target now. We took out the 1.618. Remember, as you see them respecting your lines, then you know you're getting it. All right, so now you can have confidence that you know how to get their levels. All right, So you got to practice it. You don't get it from trading live. You get it from doing 300 of them in the past. Go take a chart, get it empty, and do nothing but fib extensions. Do 300 of them. All right. So there you go. So we're looking for the top of the range tonight if it continues. All right. All depends on the dollar. New Zealand yen coming down pretty hard here, as you can see. And, our target is still up here. And they're talking to us. There's a closing reverse. They did open and close the candle above here right there. So, there's a high probability we're going to do that later today, right up in there. All right. You can see it's a 3-part trade. 1, 2, 3. Great trade. Fantastic. We go. All right. Finally, pound Swissy. Pound Swissy, it started towards target and it's now broken out. All right. So this target is gone. Wait for 5 o'clock. Can't trade the pound Swissy this late in the day. Take all this off because you'll be biased to the upside. Take it off. Wait for 5 o'clock. Redo the chart to the downside right now. All right. So it just broke to the bottom here. All right. So there we go. Now it could just be doing a sideways movement here. Remember, non-farm payrolls tomorrow. All right. So you can see equilibrium is right here. There's equilibrium right there. All right. Why do they want to stay near there? Because they can do that tomorrow or that tomorrow based on non-farm payroll. They got room on both sides. They don't care which way it goes. They're just going to react to it and go. All right. So there you go. All right. Fast trackers, we need to go to market analysis this morning.